Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Gabo. How we doing in Discord? I assume I'm okay. Is that correct? I would appreciate a response. Otherwise, I just have to wait. And how we doing in Discord?
ES sellers at 5,695.5.
One moment, guys. Are you guys getting a screen and audio in Discord? Can somebody let me know this? Okay, you have both? Is that right? Well, that's okay. All right. In the future, guys, I need you to respond. Otherwise, I have to wait. And we're losing some time. So, how about a response? Thank you. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is the higher time frame. I want to talk to you just briefly about it. This is the consolidation we've been operating in. And yesterday, which was FOMC, this is the day before yesterday. And this is the outside edge of this composite. And what a composite is really a consolidation. So this is too low. This was too high. And this was our target up here. And this was our target was here if we came out the bottom, and then higher time frame, if you will, down here. So yesterday, my plan was come out the bottom. And what we did is we ended up taking the stops out, but that sets up something else. And let's go look at yesterday. Now, I know this looks like it's pretty busy, right? But this is where that bottom was, right here, where the stops were. So yesterday, the plan was if we could get under this location right here, because we had sell stops, then we might be releasing the energy from here and we can accelerate. So the right here was where the first target was. It's called a high volume node, and that is like a retail price in here. And then the next area in a higher time frame was down here. So my targets were here and then here. Okay, now it doesn't mean anything other than those are potential. But what happened yesterday was we came down and then let me point this out. Now these are levels. None of this is predictive. Our job as traders is alignment. So all we can do, at least all I do, because I can't predict anything, and I've long ago figured out I don't know, because it's not up to me. It's up to what the participants do and where they might do it. And you'll see this repeated over and over again here in the stream. This is the retail price. This is called balance. So if the market comes out, takes the stops out under these lows, which means sellers sell stops, and there's absorption down here, and we come back into balance, what that is suggest, and then we go up and we have what's called a neutral day, and it's an outside day, and Ned pointed this out in the chat yesterday, and then we close here. Now we found balance. In other words, too low, back to the retail or highest volume price in this whole area. Then, and of course, now here's something interesting, just years of experience, and just call it curiosity and coincidence. And sometimes coincidences are not really coincidental, they are behavioral. Do you think, now this response, I believe, and it's just, and there's no proof of this, okay, is that certain individuals knew that a deal was going to be cut with Great Britain, because Carney was visiting with President Trump yesterday. And that information, there are many people who are aware of the talks and where they're at. That information might have, let's just say certain individuals might have become aware, and certain individuals may have made a few phone calls, and other individuals, and I'm only saying it's just conjecture, okay? And I've seen this many times when you're anticipating something and the market doesn't, I mean, sure, we got the sellers out, but then there was buying. So we came back into a fair price. Now here's the logic behind all this. This was what's called a neutral day. So both sides are active. And the fact that we couldn't get traction here suggests back into this. And then we gap higher. So these longs now are having a party. Okay, very exciting for them. Well, what else do we know? In the ETH, we start seeing selling or profit taking. And then what is the possibility? The possibility is to come in, fill the gap, and test levels. So that's kind of the scenario. Now, I'm going to give you something else, a couple of statistics, and you have to vet everything for yourself. And I'm going to give you context. The key driver of all of this is the condition of the market. And part of the joy of being a trader, and especially a day trader, is context is fluid. So different participants at different times take control of the market. That creates our rotations. And part of developing a trade plan, which is what really the Trader Lab is about, understanding the business, is to build out a process to help you stay in alignment with something that is always changing. It does not stay static most of the time, unless we're in a trend configuration. That's not the day. Today started out one direction with responsive sellers, and then we turned back into continuation. Another little tidbit for you, just a sidebar, and you have to vet this. There's approximately a 30% probability that when we have a neutral day, which is what we had yesterday, that means we took out the first hour's high and low yesterday, almost a 30% probability we have another neutral day. So 2 in a row. And 3 is very rare, but it can happen. So that neutral really says two-sided. So what happens if you gap higher? Potential for profit taking. What happens if the profit taking gets exhausted? Then the buyers come back in. And again, nobody knows. Now I'm going to show you, and I'm going to mention something here to you. Let me just see. Open in range. Whoop, wrong one. So we have trade, you might say, a lot of supporting material to help traders develop trade plans. The thing to understand, what's most hardest for us is when you're in a random environment, we're looking for certainty, and even developing traders become mechanical initially. But mechanics does not fit in this business. It is alignment. And under one condition, a trade might be qualified, but when that condition changes, the trader must be thinking in different, think of it as time frames or conditional processes. So it's if this, then that. But if not, then what? That is a required conditional statement. And you need to be continually narrating so when a condition changes, you're not myopic. And it happens to all of us. And of course, as a developing trader, it's going to happen to you a lot because it takes a bit of organization, maybe checklists, maybe putting alerts in your software that can define change, anything that can help you support our lack of ability to multitask, because that's a weakness for all of us. So as you vet a trade plan, you need to start finding where the quote weaknesses are and then look to create support for it, whether it's a checklist, whether it's something in your software that says, hey, wake up, the condition is changing, however you define that. And that's where the work is, because and you're going to be continually tweaking and tuning and learning from your experiences. That's what trade plan is all about. Now let's talk about the condition of the market. We had a neutral day. We took out the fuel under the consolidation and found buyers. We have a fundamental input, which, as we know, scrambles the auction. It changes and it has to auction that new input, which is a trade deal. And what does it mean for the future? Who knows? What do we do as day traders? We trade the here and now. So we opened out of range in a gap. Yesterday's high is here, so out of range in a gap. So the market is out of balance. So let's talk about what that means. It means that the previous perception of the fair price. So we have our gap here, and our perception is that maybe that's too low. So what might we do? As you know, we might just keep going up. We might fill the gap, and we have a couple other little pieces. Yesterday's value area high is a high probability target, settlement, and yesterday's naked volume point of control. All these are targets. Now, let's take a look at this. And this is available in TraderLab if you guys are interested in some of this process and learning really the business of trading. And of course, you have to develop what works for you psychologically, psychological alignment. Some traders trade rotations 8-10 points, others are going to trade 3, others trade 40. What's your plan? So that is something you build, because if you take a longer or higher time frame approach, you're going to also give back a lot of open trade equity when the trade fails, and you have to emotionally be okay with that. And you won't know that until you start operating here. And building it and tuning it. Building a trade plan is not a 30-day process. It is an evolving process. So you have to learn about yourself, and all of this is what TraderLab is about. Understanding how the business works, but how it aligns with you and what you can do to build a business that might have a statistical edge, which means creating sustainability. The other part of it is, can you actually execute it? So that's where this integration of psychology and process come together. So we opened out of range in a gap. The market's out of balance. 2 possibilities: gap and go, never look back, or what's called responsive selling. And most of the time we get responsive selling. If the market took out the weak longs yesterday and found buyers, then there's sellers above us. Let's remember that. The other part is, if you got long yesterday, what might you do on the gap? You might respond to the gap. That's what's responsive selling, and take a profit. So how do we put this back? What do you do then? You want to trade back into balance if we have those sellers. And then where's our potential targets? Testing yesterday's range, yesterday's high, and the value area high, and then settlement and all this, and even this. But let me give you statistics now. I'm showing you how we put pieces together, and I hope you find this useful. We opened higher out of range. There's approximately we're going to take out about a 96%-ish probability we take out either the first hour's high or low. There's a 93% probability we take out either the ETH high or low. A 79% probability-ish we get to the overnight volume point of control, wherever it went. I think it's over here. ETH mid, just to give you some ideas, about a 62% probability. Getting to the previous close or settlement around 48%. Getting to the previous value area high 43%. Statistics are going down. Getting to the previous point of control here about 30%. So what does that tell us? And wait, there's more. I got to find it. Hold on. Getting to the previous high or low, 63%. So, and we know we got the fuel out. So there's more than just statistics. So we're looking for responsive selling. So that sets up, if we get in range, we might only come here, fill the gap, go north. That's one possibility. The other possibility is come here. So that's the possibility. And then we have to see if we come in this area, what happens? And then that sets up other possibilities. Now, subject to your trade plan, you can take one side, both sides, no sides, and only trade one side. It doesn't matter. What matters is having a defined plan and having the discipline to just take your trades, not chase the market, not respond to FOMO, not lose your mind, because that's what average retail traders do. And as we know, they don't have sustainability. To actually have a trade plan and follow it is going to be the most difficult part of this. Also, doing the work is also required. And most retail traders have FOMO and they don't even understand or recognize it because they're going to skip doing the work so they can push the button and play the game. That's another way out of the business. So we have a high probability of testing the ETH volume point of control. You remember it's about 79%. Past performance not indicative of future results. You got to vet this. Hold on. And if you guys have questions, post them. I can't see the chat right now, but I will come up and look at it. And please hit a like. And I appreciate you visiting the lab. So this is the retail price from the ETH. So I know possibilities. I don't know anything, and I like to know. I don't know anything. Let me just look up here and see what I got here. What is this? Hold on. Okay. So, guys, can somebody confirm where was the full session VWAP at 8:31? Because this moves. So is this more or less accurate? Because it might not be accurate. It depends when I start my book map. How about a confirmation, Trader Lab? Trader Lab? $91? Oh, so it was down here? Okay, so it wasn't there. All right, that's fine. Okay, so we get buying on the open, RTH open right here. Should say we get our sellers, we get our buyers, and right here, actually, right here, I was looking for responsive selling. I took a short here, in here actually. Stop was here. Got a nice scale. Got taken out. Now this is my support. Okay? This is called the variable high volume node. So my first trade was to try to get short for the selling. And the open is very difficult. I just want you guys to know. I always say in Trader Lab, this is the last place to trade. I tend to take more stops in this. And the reason is because I'm trying to get on a larger swing. So I'm quite willing to take a stop. And every time I put a trade on, of course. So what we get here, this is a weak high. Now, I don't, when I get in this trade, I'm not really conscious of this until I come across. And right here, this is resistance, that is resistance. This is really what got me in the trade. I saw this, I saw the break. It got me, I got in really, I could have done a little better, I think, but I got scaled, and then at that point, I am looking, to come all the way down. Overnight mid was the actual, what I was going for. So I got taken out of it. And then, then you start questioning yourself, what should I have done? Next location. I see buying here. Location, location, location. I see my buyers, and I don't see progress. This is called delta. Let's just look at this. I've been talking about delta. Now, I don't use the cumulative delta. It doesn't matter to me what happens cumulative. I trade here. So when I see the sellers who are where the heavy volume, or I should say delta is, and now I see my buyers, and I'm seeing the buyers here, and the market's going up. I get my sellers here, and the market's just wobbling here. So right now my buyers are in control. I get my buyers here, and I'm looking for this. If I don't get movement with delta, what does it say? Let's look at the language of the tools we use. It says that there is absorption happening. Now, as soon as this breaks here, this sets up a short. Now, let's come back to this. Now, this is not accurate. This is the full session VWAP. It's not in the right place. So let me show you this. Now, this gets a little more complex, and the reason is I use delta and order flow. If you do not have order flow, it gets more difficult for execution, because then you're relying on price action. So it's a little more, which is why I use Bookmap, because I don't want to execute here if I can execute in here. So that's why because I could never read the DOM. So when Bookmap became available, I was an early adopter of it. I think 2015 or maybe somewhere in there. And because I couldn't read the DOM, and I tried, couldn't do it. Because I can't, it's like too many multi-inputs coming at you at the same time. So the idea of the heat map and absorption, I wanted to see it. So I can see it here. So if you are using this as your price action structure, I'm going to show it to you. You could enter there, but your risk is greater. And again, that's strictly, up to you. If you have an order flow tool, and you have to learn order flow. Order flow is not, guys, red light, green light, wrong business. That's what we all want. And if it existed, we'd all do it. But what does exist in this business is, to compete, you have to be better. So this is the absorption. And I don't know when I'm looking at this, because I'm seeing more buying here than I saw here. So that was suggesting to me we're going to keep going. But when it doesn't happen, that's really good. Delta divergence is what, I would say that's really what's going on here. Divergence. More delta, less movement. Why? Sellers, passive. We don't see them. Break low is a price action trigger. My short is up in here. This is the short, and then this is the potential scale, and then out the bottom, if that's your trade. Sweep here. This suggests counter rotation. Now, it doesn't have to do anything. Let's see what it does. Back here. So this is saying here, so I was only doing shorts based on that context that I read to you at the top of the stream. These are tools. They're available at Trader Lab, and you know, and it's hard for traders to organize themselves and prepare. All of this is before the open, knowing what to anticipate, not to predict, and knowing that we have a high probability to do what? To get to the overnight volume point of control. You wrote this down. It's almost 80% probability, and you have to bet this for yourself. So if I take a short here, because probably too much caffeine, who knows, but I'm looking for to go down, and I'm not in the right position, then I know statistically this is the next location. And I am an aggressive trader, and I take more stops. And I always tell traders, don't trade the open, because it's going to be potentially two-sided. So my trade's shorts. So this is the next short is up here. So there, scratch, here, short, scale, out the bottom. Now what? So for me, I'm just holding. Now let's look at the delta again. Sellers, sellers, sellers. Now here, let's look at the delta. I'm just spending a little time in a different place with you guys, kind of an interesting thought, isn't it, to cover different things. So I got my liquidity here. Now, as we're going down, you'll notice the sellers are in control. You get a little buying, but it's really sellers, a little bit of buying. I get this pop, but my sellers are still in control here. Now I counter rotate. This is my resistance here. Now I pop above it, but I come right below it. Now, if you're managing your trade, just so you know, subject to your plan, you might right here, you might get out of it right above here, above this. And now I get my sellers again, back in control. It's a fight. Buyers, sellers are here. Buyers are weak. Sellers are here. Now let's look at the delta again. I've got heavy selling, but we're not going down. And again, you won't know until hindsight. Nothing going on here. And I get, here, let's open this up a little bit so you can see it better. So as I open it up, I can see more information, This is called VPOC migration. This is the new retail price. If that's too high and this is too high, it suggests lower. So right here, it's too high. There's resistance. Too high, moves lower. Resistance, going to zero. More selling. Now here we have less selling, more selling. So you see how it goes down. And then what happens here? I come across this right here, and right in here, I have more sellers here, and now I get my buyers. When's the last time you saw buying like this? It might be changing right here. And I don't know, but let's look at the next rotation. Less selling. So I have sellers, more buyers, and then I look over here. I want to see my sellers. What do I got? Nada. Zippo. What about here? Nothing. Buyers again. Change. So where's my resistance? I have the VWAP, I have the mid, and I have VHVM. So let's look. This is a structured trade. If we think the trend is down, this is called VWAP to VPOC. Let's look at this. Now, these are trades you have to vet. It doesn't mean anything because all trades, we all take stops. So you got to get over it. So VWAP to VPOC. Let me show you the trigger. It's a structured trade. Right here, you have your delta. You break low. Location, location. Break. This sets up a trigger. Pull back to here. This is why did the market go down from here? There's sellers here. And these guys were absorbed. Then the sellers are in. The sellers are in. I come back up. Where's my buyers? Where's my delta? They're not here. What about up here? Nada. What about over here? You see? Now, that doesn't mean anything other than right here where we had buyers, there was sellers, and now I don't have them. So what does it mean? Maybe we're going to come back down or take a stop. You know, it's always part of the joy. See? So structured trade. This, too much caffeine. But I was looking only for shorts. Okay. So it doesn't matter to me. And what was my target? I posted this in TraderLab. Overnight mid was my target, which is over a 60% probability. And filling the gap is also on the list. And based on the top of the stream, if you're following this stream, and this is kind of what TraderLab is about, you know, it's not about what I do. It's about you understanding how the market works. And then this is the next target. And all this is in TraderLab. So, and I post. So anyway, market comes down here, next target. So now I'm holding runners and I'm going to fill the gap. So I had this, and more actually, because I don't know. Remember, nobody knows. This, and that. All these are potential targets, and the market could still go up from here. And nobody knows. So that part, unknown. But remember at the top of the stream, what is my key level to check? And was this right here. Okay, are you guys with me? You guys have questions. I'm going to take a look right now. I don't know where the market is. All I know, it's off my chart. Where are we here? I got to see. Hey, at the top of the stream, I gave you guys, let me just look here. That there's a over 90% probability we take out either the ETH high or low. And there's a 76% probability we take out the ETH high. I don't know if I gave you that one, but so statistics, context. So let's take a look at this thing. So we got the overnight mid. Where's the ETH low? It's there. Where else is it? Under yesterday's fair price and under the micro composite volume point of control. Now let me show you how this fits. Because you really do need to understand what's going on here. This is the retail price for this consolidation. Remember, we took these stops out yesterday and it was a liquidity grab. We came back to the fair price in the intermediate time frame. That sets up the possibility and a neutral day. So we know the sellers were here and then they got squeezed out and then we closed right here. That's called balance. When you open out of balance, in other words, we're rejecting the previous, and that's based on this day, the previous fair price, which is right there. So all of this in here is the fair price. We opened up somewhere up in here, I think. And if this now, so then that means we can come back and make sure and test. And if the value area high is too low, we then can launch and try to find what's too high. 57.24 is where the stops are over here. And if we get out of here, we can come back here and wherever. Okay. So what we did yesterday is took the stops out below, grabbed the inventory, and now we got the shorts in here, and it's time to abuse them after we. Does this all make sense? And I'll look at your questions. Please post them. Thanks for your patience. This is how the market works. Now how? The rotations are random. So let's just move along here. Fill the gap. If we get below inside yesterday's range, the next location is this. And that's all posted in TraderLab. And potentially lower. No way to know. This is why trade plan and trade management, because nobody knows anything. Now, right here, so I was not streaming, I was narrating my short in TraderLab. Now, here is very important, and there's a couple possibilities here. Let me look at your questions and before we go on to the long side. And thanks again for your patience. How we doing, guys? Yes, Ben, responsive selling at the opening. Yes. Please hit the a like if you're visiting in YouTube. So, yeah, this was responsive. And based on the context and our pre-planning, when you have a gap out of range like this, the market has a tendency to come back and check it. You know, fill the gap. It doesn't have to do anything. But that's the longs from yesterday. The idea is when you get a gap like this and we're out of range, out of value, that we can come back and check to make sure. Is this really too high, or is just weak side selling, responders taking profits, and then the buyers come back in again? And we knew we had that micro composite outside edge, and there's going to be stops up there. So if you take the concept, if we know there's sell stops under here, what's sitting over here? Buy stops. So if I gap, check, then what? Out the top. So that's the idea for today. That's why this is right there. And then if we get out here, then we can look over, and I have this price covered up, but I'll try to see if I got it. I think I have it on somewhere up here. So once we check this and we come over this, and I have a sweep, let's look at our delta now. Sellers, heavy selling, no buying, heavy delta, selling, 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 going to zero, selling, break below this. Now, what is this? These are icebergs, limit orders. This is the passive side. They just wait for price to come. So we break low. At this point, it looks like it's going to zero, doesn't it? Right? Well, we're trying to get here and maybe lower, right? So let's watch. One moment here. I got to just check something. I'd have to check a level here. I just got to make sure everything's lined up properly. So, subject to your plan and trade management, some traders might take a long. Not me, not here. Because, and it could be the long of the century. I'm disciplined, and I'm very detached from, I've paid so much over the years for FOMO that I've gotten very detached from having to do anything. I just find for me, I can get where if the context shifts, I might not get on the other side. I then wait for another way in. But, and this right here, I got taken out of my short on this rotation. And then I was looking at it going, well, where might we come? So, and then are we going to come back down and test this, or are we done? That was the question I was asking myself. So I got taken out. Now, up in here, I see my sweep, and this is called I didn't mark this. Let me mark this for you. A variable high volume node. Now, I'm using compound elements, and the thing about each of these elements is to learn what it means, not mechanically. If you want mechanical, trading is going to be very difficult for you because it's not mechanical. It's based on participant behavior, not mechanics. So if this is too high, I can come back and test it, but I don't put an order out here. I'm looking to see behavior. In fact, even here, I get a sweep. which suggests potential counter rotation right here. But I don't have a trigger. What do I have here? I'm in the middle. I'm in balance. How do I trade balance? It's called mean reversion. Outside in. I'm inside right here, so I don't have anything. This is what was too high previously, and now I get a sweep. So now I know I'm outside, and I don't know, unfortunately, anything in the sense of where it might go, other than I know these prices were too high, okay, previously. So we were rejecting them. I'm coming back to a level that was created earlier here, right there, and I think there might be another one, but let's look at this one. I'm going to put a line here just so you'd see where it is, so you can kind of see how this might work. So I come up, I get my sweep, I've got my buyers, and where's my, what happens up here? And here, why don't I have my buyers? Where are they? I've got buying here in a sweep, location, 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 and liquidity. So I'm putting pieces together, not predicting, observing, and anticipating. There's a big difference between predicting and being in a state of mind that says, I don't know, because I don't know. So if I know I don't know, then I'm not going to predict anything. I'm going to understand market mechanics and where behavior might happen. Behavior can happen here. And if I push through it right there, I'm looking for a trigger actually right here. It's my location. Where's my trigger? I get my sweep. I'm looking, I've got my location and I've got no trigger. What do? I got buying, and I have weak buying. So I'm going higher, and this is delta divergence. And I have another location. Now let's put some more pieces together. My liquidity comes in. Did we have liquidity here? No. Now I did have liquidity here, but my location is there. Can you kind of see? Does that make sense? Ben, I never stop. I'm getting a great question from Ben. Thanks, Ben. How do I deal with FOMO and fear of loss? Do you have something you do to deal with it, or do you prevent it altogether? No, I don't prevent it at all. I battle it because I still feel it. The thing about it is having a way to interrupt it. So we have, let's just say, because we're wired to respond to emotional triggers, we're always going to have FOMO. Because we're always going to have regret or getting out early, or not that you know, errors, whatever we do, and jumping into trades because the market's running away from us. This is kind of what we do, and fear, because there's no certainty and there's no confirmation. It doesn't exist in this business. So we're pushing against primal wiring, which will completely take us out of the business. It's normal. It's part of developing as a trader. And I always say in the stream, and anybody who asks me, this is the hardest part of becoming a successful, consistent, career-based trader, because you're going to be derailed by these stimulus and emotional triggers. So what I found was trade plan and statistical probabilities are really the elements, because emotions are not tangible. Okay. Statistics are tangible. So when I'm feeling fear, I know if I put a trade on, or I have a process, that I have a probability of getting risk neutral versus taking a full stop. And I take full stops, and I also get risk neutral and get taken out. And I also get risk neutral and then go on the target, or I get risk neutral and I trail a stop, I get taken out, and then it goes on the target without me. You know, whatever can happen, can happen. Random environment. So if I accept randomness, then my job is to understand then that I have no control over anything except me, and the way I control myself is having the plan that has a tangible statistical edge. It's a long answer, but it's basically the way. And that's what Trader Lab is built on, helping traders understand the business they're in. But part of being in this business is understanding the obstacles. And not only are there obstacles to actually understand market mechanics, how the market works, why it does what it does, where vetted structured trades might be developed. I share 60 PDFs, as you know, in the Trader Lab of ideas, and each trader reverse engineers these and needs to align them psychologically with the time frame or fractal they trade. Some traders are going to get long down in here and take it out the other side. Other traders are going to be trading rotations, So this is a short. And the reason I would be taking a short is because I have statistics that are pretty good. Okay? So that's why I'm doing it. So for me, at this time, I did not have a long. And there's another piece. At 9 a.m., we get something called the IB, wherever it is, 9 a.m. back here, the IB 30. There's a high probability we'll take out the first hour's low based on taking out the first half hour's low. And we're inside yesterday's range. All of these things say to me, possibly. And this, believe me, when I was looking at this, I'm going, is it over? So the way I look at I'm just talking about me, not anybody else. I can take this short, but I've got to clear this. If I could clear this, I can come back and test this, because that's where my buyers were, and I have a high probability of getting this out, and then I'm going for this. So, and it's not a trade, this is one of those things. This is what I do. It doesn't mean anybody should do this at all. So where was my support? Remember, I got two locations here. If I get short up wherever it was, up here, then I've got a scale here. I have this as an obstacle, which is where the sellers got absorbed. You see the sweep, and the buyers took over here. So this is support. If I get below there, then I'm going here, which is part of my original plan, right? So scaled. Next scale, where was it? Here, right here. All this is structurally based. So you can kind of see what I'm trying to do here, And I use the term try because that's all you're doing. And then pull back to this. Think this, so this to this. Too high. Selling. Target. So this is my target. So that trade worked out really well. I was pretty thrilled about that. Now we have another possibility. Let me go back to the context. Remember the context, top of the stream. The market is out of balance. That's the gap, open out of range. Was the market responsive? Yes. What do? We fade the gap, in other words, into balance, which means back down. Watch for a bounce or retest at the previous range, which was there, and the previous value area high there. If I find my buyers in here, and possibly this, okay, if I find my buyers, then what? Time to turn the barge around. And this sets up another trade. At 9:30, I'm trying to keep all these pieces together for you. Remember, if I take out the first half hour's low, I have a high probability, I got to find too many stats, all these are in the Trader Lab, of taking out the first hour's low, which is this, and getting here, and then whatever, okay? All these are statistics, and Ben, we're all going to be frightened. I am. Why am I frightened? I'm doing this 46 years. Because I'm wired to be frightened. We are wired to avoid risk. It's primal. So when we see what am I trying to think of here? A predator. our wiring can't differentiate from a predator and risk. Risk is risk. So our wiring, though, treats it like a predator. Uncertainty, what's behind the tree? You know, saber-toothed tiger, perhaps? A lion? What is it? I don't know. I'm not going behind the tree. Well, what's going to happen here? I don't know. Same response. So, Ben, we're going to have those responses. The way to win the battle most of the time, and we are always going to be human, is to have a tangible statistic versus an emotional trigger. If you only have emotions, your emotions are going to be controlling your behavior. If you have tangible statistics, you now have something that you can, because it's tangible, you can grab onto versus emotions. And that means the lunatic under the hood is driving the bus, not you. Just something to think about. Are you guys with me? How we doing? Hope you're getting something out of this. Please give a like if you're finding this interesting. Okay, so this is our downside target. Now, we have another trade in the Trader Lab called the IBF, and it's a structured trade. Now, subject to your plan, if this is too low and our context says this is the area to test. So here, no idea. Right here, no clue. Because this is like the key place. If I get under here and under this, then I can go down further. And that opens up this and this, and maybe the ETH low, because we have a high probability of taking out either ETH high or low. This is your retail price for that whole consolidation. This is yesterday's retail price. So kind of fractal. And then you got settlement. So what do? Basically fill the gap, check settlement, and then come back across. Next trade is the following, something called the IB failure. Now, the IB failure, and I made all these terms up. I made the trades up many years ago. Back in the days of market profile, I was that one, the reversal, this one, which is called mean reversion, is a return here. So that's the initial behavior. Now, here's the other piece. If you don't recognize the change until the market runs away, you have to wait for a rotation and a location to get in alignment. If you don't get in alignment, you don't have a trade. If you're responding to FOMO, which is what many of us do, not good. That's not going to work. So right here, we come back through the IB. That sets up the IB failure, what it means by IB failure is we're coming back in, and now we moved from directional to back rotational back to this. So this is the trade, and the trade would be setting up from down here, and your stop would have to be under this liquidity. So let's look. We don't know, right? Now, right here, let's come back to our delta. Heavy selling. I still got my sellers here, but now I'm seeing my buyers. Where's my selling? Market's coming down. So the sellers still have it here. No selling. Now I see my buyers. Now the volume, the buying here is higher than the selling was all through here. Even here, it's suspect. Okay, but here for sure, the buyers have taken control. So that's how you can incorporate delta. Now, again, if you look at cumulative delta, it's still negative. I don't use it. I'm not even sure why it's sitting here. Because this is immediate. By immediate, I mean it's much more fractal. Okay, so this is measuring the rotations. And depending on how you open this up, you can get much more micro with it. And that's a beauty of Bookmap. So you have liquidity here, liquidity here. Notice a change in behavior here. Now, where's my sellers? I got some sellers here. Okay. But what about over here? I got less selling here than I had there. So, and they were absorbed. There's your buyers. Are my buyers going to come from it? And where's my support? It's right here. Why is this support, you're going to ask me? Because the buyers took over, the sellers were in here, and the buyers took control. If I understand order flow and I understand how the change, and I see it in the delta, when I have the buyers and they are above the sellers, this becomes support. I'm going to show you how it looks in the profile. Now, I know there's a lot of pieces here, right? But you got to take them one piece at a time. You see where the buyers took over? The sellers were here. There's your delta. The sellers are here. I come down right here. I don't have anything going on here. And that's my absorption. Now, right here, I don't know. As far as I know, it's going to keep going. Here's the change. See it? Now, where's my support? It's where the sellers who were here, these guys, where they got run over. So if I pull back to them, what might I get? More buying. These buyers. So I have buyers absorption there. I got buyers there. If I pull back and I get absorption again, here, I can get long. I can get long any of these locations. I can get long on a pullback to the IB. My stop needs to be under here, all subject to your plan. Let's watch. Where am I pulling back? To the IB, which is this. So the structured trade is against it. So this is where we have our outside edge. This is the area to be looking for the long. So you could be taking along here. You could be taking along in this. And your stop really needs to be under. Let me show you where the stop would go. I'm going to open this up so you can see more of this. Now, this is, again, how you might use an order flow tool like Bookmap. Because the more I open this up, and when I get down the locations, I'm really opening it up because I want to now get into the minutia. This is like an electron microscope. So this is just what I do. I'm not saying it's good. I'm just saying it's what I do. Works for me. And there are multiple pieces to this. If you're going to learn to be a trader, you got to kind of dig into this thing and go, this isn't an indicator that crosses over. I'm going to suggest, unless of course you're exceptional, statistically, retail traders are all doing the same thing, don't have any longevity or sustainability, even though we all have winning trades. What do we have to do if we want to do something, have maybe a different outcome? I think we need to learn how the market works and attempt not to do what they do, but learn from our own experiences. The high volume is in here. This is an auction. Buyers are here. Sellers are here. You can see this was absorbed. Selling iceberg. The sellers are there. The buyers are there. It's like a shootout. It's a consolidation. When the sellers, which are here, get thrown under the bus, then we have a structured trade called the IBF, it's called, and it's a mean reversion trade. Now we're looking to come across the range. And of course, like every trade we take, we can get thrown under the bus with everybody else. What's new about that? So this is your support, and this is your volume. So in here, or I should say your IB. So we'd be looking for a long to revert back to the volume point of control. Which is that. So that long is to here. Now you can scale before it, whatever you want to do. Then, and there's more, if we did not get into the value area, remember our plan, responsive selling, and then if we find our buyers, which would be down at the value area high or a little lower here, right? Once we come across here, we're looking to come completely across the range and take out yesterday's high. And why would we think that? Well, we didn't we have a 63%-ish probability to take out yesterday's high or low. I don't know about you, but if we can't get into the value area, which is part of our responsive selling plan, then we have a high probability of taking out yesterday's high. Right? Which I don't think we, wait a minute, I'm confused. Wait a minute, not yesterday's high. Sorry about that. Getting into yesterday's high. Now, we have filled the gap. We got down here, and then our probability is to come back to the overnight VPOC and potentially out the top. We have stops sitting here, and we have a naked VPOC at 57.10. So all of that is on the hip parade. Micro composite high stops on the hip parade. And we didn't get the ETH low. Over 90% probability of taking out either the ETH high or low. So I'm putting these statistics together. Guys, I'm not aware where we are, so I haven't seen it. I don't know if we have more gas in the tank for this. I'm going to try to get to real time now. Okay. Well, that's useful. Where are we? Okay. VPOC migration. I have to get caught up. Give me a second to look at this. Liquidity comes in the book. Current high a day. Sweep. Counter rotation. VPOC migration. I still haven't seen the structure. Let me just see what we got. Okay. So this is the new retail price. Now, how do you trade this? Let me give you some ideas and not recommendations. This is too high, which sets up the counter rotation. If we think the market might go higher, and nobody knows, the outside edge is out here. This is called the low volume area, and this is because of this rip. So the market then can rotate and come back. Rotate and come back. So the way to operate in this, and you have to vet this, is outside edges. So when the market pauses and consolidates, it changes. Even though we're going up in a directional move, inside of itself, it can rotate. So the idea with this is there's two possibilities here. We come back. If this is too low, we're going to come back here and maybe take out the high. For me, and not a recommendation because there's always possibilities, is to wait for it to come out here and start taking stops out of the current longs, which is under here. And that is what's called a low volume node. Let me make a few adjustments to my charts here. Please give a like if you're getting something from this. Today's a real busy day in the sense a lot going on, you know. So you got to know what you're going to do. And it's not about taking a bazillion trades. It's really about just taking the trades that you are prepared for that have an edge. It's not chasing the market around. Then we all have the problem. FOMO, chasing, predicting, and being emotionally stimulated. I want to see if these levels become accurate. Hold on, let me look. Yeah, more or less. Okay. So you're going to see levels come on the chart here, and these levels are going to show us high volume areas, green lines, assuming there they are, and low volume. Low volume areas are outside edges, and the market tends to do this. So there's high volume. Low volume is sitting, let me get this out of here. Low volume is actually sitting right there. It's covered up. Out here. So we'll see. So remember what the market can do. We get VPOC migration. It can bounce this way, or it can pull outside. I do not trade from the inside. I want to trade the outside. And the reason is, and this is not a recommendation, it's just what I do. I'm very patient. I'm not, FOMO has cost me, I don't even want to think about it over the years. And, fear. It's hundreds of thousands of dollars because it's our greatest weakness. This is microstructure. I'm just going to show you this. You see this right here. Chop, chop, chop. Sellers are here. Where's my selling? It dried up. I get my buyer. Just going to show you this. This is and this is not a trade I would take. I'm just showing it to you. High volume is here. Sellers. So you see right now the selling dried up. I got more buying here. I get selling. I've got less selling. And then I get more buying again. The buyers are over the sellers. I got more buying, more buying. This suggests higher. Just showing you some order flow. I get selling here, more selling. Now, what's going to happen right here if I get this big selling? Give you an idea right there. Well, I get a sweep. It's a sell sweep. If it was a buy sweep, I might anticipate a counter rotation. It's a sell sweep. It suggests possibly up here. I come to liquidity. I get a buy sweep. I get a lot of buying. What does that suggest? Absorption. Sellers. Now my buyers take another shot on goal. Here they are. Selling icebergs, sweep, liquidity. More selling below the buyers. That suggests potentially counter rotation. More selling here. VPOC migration. Now what? Well, I've got less buying here and more selling. Here's the possibilities. I can go, I know you're going to be impressed. Depending on what happens right here is going to tell me if I have more selling, are these guys absorbed and now we're going to come back and check this? Or I get more selling, less buying, and I rotate out and go for stops. So the way I think of it, and it's just the process that I adhere to, retail traders are weak traders. And they tend to do similar behavior. In other words, they trail their stops. So if I'm looking at the market, I don't want to join the weak side, because if their stops come out, that is something is important to me, because then I'll participate. But I don't want to put my stop with everybody else. Not my thing. Been there, done that, and it doesn't matter what happens from here. If I have a position on, I'm going to manage it further away, but I will not initiate in the middle. And it doesn't matter, whatever. Just doesn't matter to me. It's only one trade. This is an important event because we took out this micro composite. So we have to see what happens from here. And yes, the market can continue, and it's not important to me. Might be important to you. I don't chase the market. Cost me too much in the past to throw my discipline out the window for this, which might be fine, but it's not my trade. And I'm not recommending what anybody should do. I just found for me over many years of doing this that this doesn't pay, even though like everything we do, there's always random winners. So this, for me, if I would not initiate here, I have to get the counter rotation. Other traders in TraderLab are going to initiate here. I personally would not, but that's again me. And that's what makes trading such an interesting business, because certain traders are going to be trading this. Other traders are just going to maybe move their stop up here, but I'm not going to initiate here. That's all I can tell you about it. Do you guys have questions? Throw a question in there if you have one. I'll do my best. Or use the link in the bottom of YouTube if you're inclined. You can always visit the TraderLab community. There is no cost for that. And don't forget the like. It's kind of important. I missed this one altogether, Rod, because of course I wasn't looking at it. In TraderLab, Rod pointed out we have, if the trend is up, which is what it is, then after we did the responsive selling, we have another trade here. Rod, thanks for posting that. I did not even see this because I hadn't seen it. remember, we have the IBF, which is the reversion trade, which is a long off the bottom. And then we have the IBC. This is the first hour's high. And once we come across and take it out, and now we're looking for continuation, this is a long. Missed that one. And again, I didn't see it, so I kind of miss things you don't see. So here's your sweep. Here's your liquidity. And we have two things. We have the overnight volume point of control, which was what we were leaning on for the shorts, too high at the open. If we come back to it and break it, and now we have the IB high. Once you break this, this is called the IB continuation. Let's see it. So now you're going to be looking for a long. Where does it come in? Right here. Thanks, Rod, for pointing that out. Didn't even see it. So there's the trigger. Here's the test. This is a structured trade. Let's look at how this thing works. So you get your break. This is your resistance, because this was the high. So you got location, break high, pull back. Now here's the structured trade. Let me show you exactly what it is. So first of all, we get this liquidity here, no clue. Now, Ben, you're talking about, these emotional states. When this breaks out, and again, I didn't see this because I hadn't seen any of this. I am emotionally triggered. FOMO, it's going to the moon, the whole bit. Emotions. I missed it, whatever. Well, where's my next trade? If I'm using a trade plan, it's here. This is what structured trades are about, and this is what I've shared in Trader Lab. So traders can actually start building out pieces. And then your job, all of us, is to just wait for your trade. Not click the mouse here, oh, it's going to go, I want to get it, or, you see this and you think it's going up. Well, there's no trade here, is there? It's here. So break high, pull back. Let's look at the trigger. Absorb. Now we're coming back here. Sellers. Still got the sellers in control. A little buying there. Nothing. More sellers here. As far as I can tell, it's sellers. A little bit of buying here. Nothing. Let me help you with this. You see the delta? I get some buying here, less buying here, a little bit of selling here, more selling, going lower. Buyers here, no big deal. More sellers here, going lower. Location. Buyers here, more buyers here. Watch. Micro high volume structure. It's right there. So I'm looking at a couple of components here. Right here, it's still the sellers, okay? The buyers are here, and the buyers are there, and the sellers are here. The sellers are right there. Why? Because I had a buyer. I've got more sellers. I have a buyer. The sellers are there and there. Why? Because the buyer got rejected. They were absorbed. So and there's a selling iceberg right under those stops. Sellers are now here. Sellers are in control. Buyers under the bus. Sellers in control. Buyers are here. And I don't know at the time, naturally, but the buyers are here. And I can't tell that. Sellers are still in control. Here, and where are the sellers? There. Where are my buyers now? Here. And right here, it's a consolidation. What I do know is my buyers are here, but I don't know if they're going to, I don't know any of that. Here, I break high. That means the following. Buyers are here, sellers were there, sellers were there, sellers are here, and I'm now starting to overwhelm the sellers. Change. Sellers here. Look at the delta. Now, right here, I've got more sellers here than I had there. And this was the last place I had more selling. And I know they were absorbed. I know I'm spending time on this, but you might find it interesting. And here's the volume. Now I'm going to draw a little box around this thing to help you see structure. And I always suggest in Trader Lab that traders use all the tools, because until you can understand order flow and read it and interpret it, you need to use price action. Remember, price action is the output of participant behavior or order flow. So I'm doing it here, but if you're using price action, you'd be using this because you're defining where the sellers were overtaken by the buyers. So now my buyers might be taking control, and this is where the sellers were. The sellers show up here. There's a selling iceberg, and I've got my sellers here. See the delta. What happens? They are absorbed. I break high. This is all long. This is a long here. And your stop needs to go here. And if you bought this, your stop could also go under there. Why? Buyers were here, buyers were there, buyers were there, buyers were there. So if you got long here, wherever, stop could go there. And that's palatable. And then where are you trying to go? Across the range. And then watch. Notice we get the sweep. What does the sweep say? Long. Let me come back to this structure again for you. This is the kind of work it takes to learn to trade. This kind of processes, thinking, anticipating, there's your support. Why? Buyers were there. These sellers were absorbed. You see how you can put this together? You should be looking at this stuff every day, looking at what happened and trying to see patterns. And the thing about a pattern is we see this everywhere. What matters is where it happens and also what happened below. This is your entry or this is your entry. Same thing here. But what do we know? If I get my buyers and I know I've got less selling coming down, you see it curving down, and absorption. And where's my sellers over here? They're still weaker than this buying over here. So right here is support. That's a structured trade. You could put your order here, or if you bought it here or here, same difference. Your stop could go under here. Then you got to get risk neutral and you go from there. I hope that makes sense. Now let's see where this thing goes. And where were my sellers? So this is your resistance, and we had a naked VPOC. This is another target, 09. Where did that come from? Let me bring it back. I hope you get something out of this. So this was the next target, 09. And then out the top, and then out here, again, there's another one up here, which I don't know exactly what level it's at. 20. I don't know exactly where this one is. I covered it up, unfortunately. But let me see if I can find that for you. 43.50. So that's another area to observe. It's not a recommendation. It's just a level. You know, the auction is based on levels, so it might get there, it might not. So then it's trade management. Where are we? Is this current? 43.50, I'm going to just put this up there as a high volume area and a possible target because it was important last time we were up here. So basically, what you do with this thing, and we have VPOC migration. Remember, I don't initiate on these, though other traders in TraderLab will. If I was already long, then I use these for trade management. Remember where support is. Here. Break high. Notice how the liquidity works and how the market swept and we counter rotated. If you understand order flow, you could understand what might happen up here. Then you get VPOC migration, and there's two possibilities. Pull outside for potential long mean reversion, or we just keep going. And again, this is our potential target, and it doesn't mean anything. Doesn't have to get there, or it could exceed it. And then we can end up here. Are you guys tracking? Hope you're getting something from this. Just a lot going on here today. Yeah, CJ, it's only RTH, CJ. The white, Anna, which white are we talking about here? These lines or something else? 50 is a strike price. You might get some action there. And it's also a level up here. So you do need to watch the order flow. And that could just be spoofing. You never know with order flow what might come in to the book. You notice this started getting added over here. And there's about 200 and change sitting right here right now. So the market seeks liquidity. So let's see what happens. We can get a counter. This guy pulled. So they did some business here. You see the icebergs. Then they're done. Now the next area is up here. So all you would be doing with this is, subject to your plan, is trailing. And then the market takes you out. At some point, you will get taken out. Or, subject to your plan, you're staying far away from it, and you're going to go through these counter rotations on the way, because the market is going to rotate on itself. It's just the nature of it. So you're either far away, or you're managing behind, and you're going to get taken out, and you just go, okay, next trade. That's it. Remember, it's 100% random 100% of the time. The idea of being in the business of trading is to understand it's not predictive, but it's a business of alignment. And you also need to understand, now let's look here. This selling is greater than the other, well, let's see what happens here. It's still developing. Okay. So do we get more sellers here, or do the buyers now exceed this seller, or do we have less buying and we roll over? So let's watch the behavior, because there's always possibilities with delta. If the market's going up and you have positive delta, the market goes higher. If the market's going up and you get less buying, the market can counter rotate. If the market is going down with high delta and the market does not continue, that's absorption. That's the way to think about it. So we're getting our sellers. So let's just watch. Buyers are still doing a heck of a job. We need to see there's your buying icebergs. Got covered up, but he's about 100 and a bit here. There, buying icebergs. So the sellers are being absorbed. So that still suggests potentially higher, but it can change at any moment. So one way to do this is to put together all these pieces, and then you have to prioritize your inputs. What creates a decision to take action? if you don't know the answer, you have to, in my opinion, you got to be out of the market working on your trade plan. If you're making it up, then what you're doing is you're only responding to emotional states. You don't actually have a plan. You will not stay in the business, unfortunately. You'll have a good time and you will have winning trades, but you don't have an edge, you go out of business. That's kind of the message, I think, is what differentiates those from sustain themselves in this business from those who don't. It's not doing what other retail traders do who don't succeed. And I'm going to tell you, it's not easy. In fact, it's very difficult. But I believe anyone who comes to Trader Lab and does the work can learn how to trade. But managing your emotional states will take you out of the business no matter what plan you have. So I always suggest in Trader Lab, and I know our nature is FOMO, right? That a trader develops one trade, just one, and becomes expert at it. Because to develop one trade, it creates a process template. Also, along the way, you need to learn context to know when that trade is qualified and when it isn't. Also, you need to learn risk management, trade management, targeting, and discipline. All those elements will come together in one trade setup, one structured trade. And you need to prove to yourself a template of this business and being able to actually execute it and know that you can develop a statistical edge. If you skip that, you're going to skip it on all the trades and you're just playing a video game. Go to the casino. You'll have more fun, and you know at least you could probably have more fun and spend less. And get the coupon and the ticket to the buffet. So, not here. This is a business of discipline and statistical probabilities. We are in a gaming business. That is the way casinos operate. And the way casinos operate is they only play games with an edge. They don't make them up. They're not emotional. They don't do the things we do. That's why they have a successful business model. And those of us who don't have one will not stay in our business because it's a gaming business. So if we use gaming as our platform because it's proven, then all we need to do is approach this business like we own a casino, and that we're only playing games that favor us. And the rest of the time, we don't play a game. And yeah, we are going to pay the gamblers, and also they're going to pay us. But if you don't have an edge, you're still going to have winning hands, just like the gamblers. But over time, you're not going to succeed because the dollars do cross the table to the house. You have to decide right here, right now, if you're going to be in this business, are you going to be a gambler, or do you want to sit on the other side of the table and extract the dollars from the gamblers, even though you have to pay them? Because the casinos pay the gamblers too. But because they have an edge, in spite of paying, overhead and costs of production and paying the gamblers, they still extract the dollars from the gamblers. That's our business model. So now you have to decide, do you want to be a gambler and sit with them, or do you want to have a business? And it's not easy because you're pushing against primal wiring and all the stuff that interferes. This is why I agreed to do Trader Lab, because I've walked in your shoes, and so has everybody else in Trader Lab. We are all the same in many ways, but what we need to do is understand what doesn't work, because we paid a lot of tuition. The problem we have is we get winning trades and we think we just have to make it better. Gamblers have winning hands. What does that tell you? Maybe don't be a gambler. It's up to you. Hope you get something out of this. This is what the Trader Lab community is about. There's a link in the bottom of YouTube if you want to visit the Trader Lab. There's no cost for this. This is what the Trader Lab community looks like. There's 60 PDFs you can download. If you're interested in the structured trades, you can use that as a template to reverse engineer. There's a lot happening: statistics, research, data mining. This is for serious traders who are interested in the business. It's a professional community. Thanks, Ned, for doing this. We have a library of webinars. Some of them are up to 5 hours long of real-time narration. Start with the primer that gives you a high-level overview. Then look at Meet the Trader Lab, Advanced Trader Education. And it doesn't matter how long you've been trading. This is available to all of you at no cost. Use the link in the bottom of YouTube and trade safe. And if you're a gambler, that might not be sustainable. If you had that experience and you're still doing the same things, visit the Trader Lab. It might help you on your journey. Thanks again, guys. Thanks for visiting Trader Lab. Don't forget to give the like on the way out, and I look forward to seeing you tomorrow.